Good morning, this is Ron Brown. It is the 23rd of April, Saturday morning, 2022. I'm going to take a look at this brutal market, and I'm going to use Thinkorswim and HGS Investor software. Now, this is my standard risk disclaimer. Anything that I may point at any stock or ETF doesn't mean I'm recommending it. All trading strategies at your own risk. I'm going to minimize this, and I have a 4 time period layout here of the NASDAQ composite. These are called fractal charts, and I've seen several different definitions of fractal charts, but the way I learned about fractal charts, or my interpretation of fractal charts, I should say, is that longer term charts are of course built from the shorter term. The shorter term will turn first, and then as it begins to turn, it'll build the longer term charts at the same time. I'm going to bring up a drawing here, or frame, and show you now. This represents 1 day. This is a 78-minute chart, and this is 1, 2, 3, 4, 5 bars yesterday, which gives us a daily chart, and 5 of these daily charts changes to red. 1, 2, 3, 4, 5 represents the weekly chart, and 5 of the weekly charts, or I'm sorry, 4 of the weekly charts, 1, 2, 3, 4, represents the monthly chart. It's actually closer to 4.5 weekly charts represents the monthly chart, but that's close enough. You get the idea. So this is fractal in nature because it builds from the small to the large, and from this point, or I should say at this point, we have a totally different perspective comparing the 78-minute to the monthly. Large time periods always dominate. So during this long period here when the market was trending up on the monthly and the weekly, yes, we had pullbacks, but they didn't break down, and we're seeing a totally different market now because it has broken down. I want to bring up this, I'm going to maximize the weekly chart here, and let's take a look at this. You can see going up. I want to get an arrow going here. Here was a higher high, here was a low, but this low is much higher than this low down here. Here's a higher low. You can see it went up here, made a higher high. Here's a higher low, and it just kept going up. Here's a higher high, higher low when compared to this low. We had a higher high, slightly higher high here, but the higher low held above this low, and so on and so forth. Higher high, higher low. Then we got up to here, higher high, and then we started seeing a series of, well, first of all, here's a low, and then here is a lower high when compared to this high. And this is when the market really started breaking down. So here's a lower low, here's a lower high, came down here, formed a lower low. Now this looked like it was going to, well, it did form a higher high than this one, and what I was looking for at the time was for this to pull back and hold here to form a higher low than this, and then break past here, but that didn't happen. It gapped down on the weekly chart, and what do we have here? We don't have a lower low yet because this is the established low, but we certainly didn't get a higher high. So for this market to trend up again on the weekly chart, it would have to hold here. This would be a higher low than this, and then it's going to have to take out this area here. So it's got a lot of work to do. There's been a lot of pain, as everyone knows who's long. Now let's look here at the monthly chart. The monthly chart, here's the high. This is the current low right in here. and it's a lower low than, well, this is kind of subjective, of course, but it's a lower low than this. But until this low here is taken out, we could have this, we could consider this maybe a higher high than this one. And if this low is taken out here, I'm afraid we're really in trouble. So the monthly charts are dominant, but I'm not seeing a lot of encouragement, obviously, from this monthly chart. I want to restore that sell. And if we move over here to the daily chart, this is a real mess. But on my daily charts, I use the fan, the 200. Let me get rid of this. I use the 200-day exponential moving average, the 100, the 50, and the 18-day exponential moving averages, and you can clearly see that the trend is down on the fan when I zoom out. See how strong it was over here as the market was working its way higher. Even on this pullback here, the 18 did come down through the 50, but the 50 didn't go down through the 100. So this was just a pullback, and then it moved back up, and then it clearly broke down over here. So the fan, the moving averages are just a visual guideline for me. Now looking at this chart, if you remember the weekly chart, it did get up here above this area, and like I said, I was looking for a pullback here, and then hopefully a break above that, and it just didn't happen. It gapped down and broke down. Now we're challenging this low here, and on the monthly and weekly chart I showed you the support areas. If this breaks down, we are really in trouble. I say that from a bullish perspective. Okay, I'm going to restore the sell. And where you're going to start seeing a change in the market would be on the shorter time frames. So you can go to lower time frames if you want. I find this works well, 78 minutes, because it's not too fast, not too slow, but it's going to build here in the 78-minute chart first. And what you should start looking for if this market's going to change, you want to see a higher. I'd like to see it stop and turn up a little bit, and then form a higher low than this low here, and then a higher high. And that would be the beginning of a trend in the 78-minute chart. It wouldn't be the beginning of a trend in a daily chart, because the daily chart is going to have to build on this, and it's going to have to start doing the same thing. Same for the weekly, same for the monthly. This technique can be used on any security. Well, let's just take a look here. Here's Apple, and you can see the long-term trend is still up, although it's been struggling. This is the monthly. This is the weekly. It's on the weekly. Here's the high. It formed a lower high. So on the weekly, it's really kind of trending down at the moment. If it takes out this low, that will confirm a weekly downtrend. But by using this, you can quickly look at a bunch of stocks and get a feel for the strength, the long term, the intermediate term, the shorter term daily, and then the intraday. And you can see where they're turning. I'm just going to flip through. Here's ARKK, a disaster. I'm trying to find any strength at all. Of course, here's Netflix. This gap down, 78-minute chart. Doesn't tell us a lot, anybody who got caught in this, but looking over here at the daily chart, why would you even want to be long this stock? Because the fan is clearly in a downtrend before the earnings ever come out. And on a weekly chart, it had broken down long before the earnings came out. And the same thing on the monthly chart. The monthly chart and weekly chart and the daily chart tell us this stock was in trouble long before the earnings came out. NVIDIA, one of the leaders of the prior rally. Look at it. It's totally broken down on the monthly chart, on the weekly chart, the daily chart, and of course the 78-minute chart. I don't want to belabor the point. You can do this yourself. Let's look at one more. Twitter's been in the news, of course, with Musk suggesting that he's going to buy it. Maybe he will, maybe he won't. But what do the charts tell us? The long-term monthly trend was down until it started going up, and then here's the announcement, and you can see the gap up on the weekly chart and the daily chart, and it's holding here right now. The 78-minute chart shows a series of, let's see, a higher high here, the low, here's a higher low, and then it's up. So on the 78-minute chart, it's bullish, and you can clearly see the momentum builds from the smaller time frame to the larger. This isn't a perfect method, no method is, but at least it helps put things in perspective visually. Now I want to move on. I've spent too much time on this anyway. Let's bring up HGSI. Now the chart I've got in front of me is one of my charts. Now if you have my files, I use my daily analysis charts. I'm using the number 1A right here. This has the moving averages for the fan. First of all, I'm going to start at the top here. You can see that this particular stock, and it just happens to be in here. Building maintenance services, it has an 82 group rank. Sectors consumer discretionary, and there are 4 stocks in this industry. I have the VPA information here. Yesterday the volume was high, spreads above average, closed very high. I'm sorry, this is the Wyckoff information. The VPA information would be up here if there were a signal. So if I go back to this day right here, click on it, it tells me there was a bullish flag, effort to rise on this day. And then the next day, high volume down bar after an up move indicates weakness. It was a one-day weakness, but using the daily chart with the moving averages, I can put this into perspective quickly. The 3 is above the 6, and the 6 is above the 18, which is above the 50, which is above the 100 and the 200, and you can tell that very quickly by looking down at these windows. The 3 and the 6, this is a micro trend, a short-term trend, 6 and 18, positive. And the 50, 18 is above the 50 because these are all above the 0 line. Now, and they're green. If you look back here, you can see when these are below those moving averages, it's a red histogram. A couple other indicators on here. The volume point of control shows when the bulls are in control of this stock based upon a 10-day window or 10-day slices, and also where there are pocket pivots. So a lot of information in this daily chart. Also, I can see that the EMA fan is up. That's because these are all stacked properly. At least the bottom 4, the 3 and the 6 are not part of the calculation for the fan. But this is a beautiful chart, and you can see that the buy points were right in here when the red turned to green, and there were VPA flags suggesting that. Now I have scans in here, or a scan in here where the 3 crosses the 6. I also have the Undercut and Rally scans, and they're down here in folder number 2. Probably not going to get much. Well, I need to go to all securities. To go to all securities quickly, I hold down the alternate key and hit the space bar, and then I reapply the filter. Now I can immediately look, I immediately look at these columns right here. This is the days since the 3 crossed the 6. I allow a 2-day window, and the days since the volume point of control went positive. Now this is not. This must be an IPO. It's not in a group yet. Let's just take a look at some of these. Well, it's see, there's no information on this. It's a pretty new stock. I want to try to get some more information on it. I'm going to right mouse click and get more info from the web. I have pre-selected bar chart. That's where we get data from HGSI. All of these news services are available. I'll just bring up a bar chart. There it is, and it's we can learn a little bit more about this. Has to be news on it. Strong buy, technical opinion. Here's a story. It's I don't know how to pronounce this. GoGoR launches battery swapping in China. So it's Chinese stock, and that's what the news was on it today. You could put this in a watch list, see if there's any follow through on this. The problem with chasing, as you can see, those who get on late in the day can really get hurt, but this may have some legs, so it's worth putting in a watch list. Let's look at another one. This is a crossover today on the 3 and the 6 on the volume point of control. Both of these. Here's the volume point of control. Let's make that red. And here is the 3-6 crossover. It's really hard to see on the chart, but this is setting up nicely. And it's an exploration and production stock. It's if oil continues to hold at high levels, this one looks like it's building and it may go higher. What do we have? We have a fan in the correct order, which suggests that there is strong interest in this stock. But I can also see, looking at this, that if we look back, that there's resistance here also. So it's got to get through that, but it is, what's the volume like? Volume was down compared to the prior day. It closed about mid-range, so it was under accumulation yesterday on a really bad day. I like this chart a lot. I'm going to go down and look at another chart quickly. My end of day, it's 2A chart. You can see the volume was above average here, above the 20, 50, and the 90. Closed up 1.7. I said it closed mid-range, 55.13%. The trend is up. Relative strength is 98. You can see that the resistance area is in here. I put a crosshair on here. But going back to a different chart, I'm actually going to drop down to my UNR chart here, and you can see what it does is it puts a dark green bar here when the 3 crosses the 6. It happened back here. It happened back here. The light green lines show accumulation days, either based upon a VPA flag or a candle. These signals don't always work out, but they often do if you catch them just right. Okay, I'm going to do one more stock here. Let's look at EYPT. I'll just leave this chart up here. You can see the green cross over here. It happened here too, and then it fell back. It's struggling, but it's positive, and you can see the group is going down. But it's holding, the fan's holding in place, and it closed in the upper part of its range. But the momentum is not really there, because you can, when the momentum's there, you're going to see histograms like this as the moving averages move apart and the a stock starts moving up and closing near its high. Because as the candle widens, the moving averages are going to widen, and it tells you that you're in expansion mode, and then it's gone into contraction mode. We've got a buy signal here, but there's still this resistance at this point. But considering the market conditions, with such a horrible market yesterday. This is looking okay. I would put it in a watch list. I'm certainly not recommending it, but I'm just trying to show how you can use these charts to put things in perspective. I'm going to move on here. I don't want this to be too long. What I did in my market analysis user groups, I added a folder. It's called Major Indexes and Sectors. Notice nothing is showing up here. If you see a filter that's darkened here, or if nothing's showing up, just hold down your shift key and click on that. And what that does is it releases the filter. Another thing you can do is open this up and just scroll down to no filter. But I like to use the shortcut, and it brings these in here quickly. Then I can go to a view, and what I want to do, since I'm using HGSI indexes, I go to my folder called Top-Down Scorecard View for HGSI indexes. It's so 1, 2, 3rd folder down. Click on this. This shows me what happened with these sectors and the major market indexes that I've included in here. And the sort is a percentage price change 1 day. That's always up here at the top when sorted on the raw combo. Nothing was up yesterday. These are Wyckoff indicators that are in the program, and I can tell immediately what these signals are. Volume less than average, spread above average, closes down. And notice that over here on the percent to the 90-day, when these are green, it tells me that volume's above average, and that's going to be reflected in these Wyckoff columns above average. Less than average, they're going to be red over here. Now these columns tell me how strong the indexes are or when they crossed over. Consumer staples, 27 days ago, the 3 crossed the 6. Same thing for the volume point of control. Let's bring up that chart. And if I look at the crossover, here it was back here. That is evidently 27 days ago, and that corresponds with the volume point of control. So the strength has been in the consumer staples. It got hit today. There is a effort to fall a bearish sign, but the 3 is still above the 6, barely, and the support is still above the 18. But this has been one of the strongest groups. It's a safety group. I should say sector. It's safety. There's stocks in here that pay dividends, and consumer staples are always needed. Let's just change to the index group right now. Consumer staples. You can't tell much from this, but I'm going to go down and I'm going to look at another one of my views. I'm just going to scroll down here, and if you look at number 12 under my daily prospecting scans, let's just see what comes up when I click on market leaders. That cuts it down considerably. And I'm going to just bring up charts. This is a market leader, CALM, Calm, Dollar Tree. Got hit yesterday, but notice how it's been trending. Dollar General, same thing. Here are the buy points clear back here. You can see how well these crossovers do work. What do we have here? Hostess Brands, buy. ADM, Hershey Foods. So just by, let's go back here, looking at this folder, I can tell immediately where the strength has been based upon these crossovers. Now here is the transports are down here. They're still both positive too. Let's take a quick look here. 7 days ago, the 3 crossed the 6, and the VPOC crossed 8 days ago. And you can see that reflected here on the chart. Been hit the past couple of days. But all of these other sectors and major markets are down. The day's down since the 3 crossed the 6. What has the weakest been? The SOX, down 16 days. The 3 below the 6, 16 days ago. The VPOG, you can see there, you can tell there immediately there was a little rally because the VPOG only turned negative 2 days ago. So let's look at it. Here's the VPOG turned positive down here for a couple of days. Looked like a rally test, confirmation, gap up, and then the big reversal. But where did the 3 cross the 6 to the downside? Clear back here 16 days ago. Went from green to red. These green bars were all attempted accumulation days, or they were accumulation days based on a white candle there, a no supply VPA flag there, a test, confirmation of that test. These were accumulation days. It just didn't work out. But the 3 remained below the 6. So what you're doing is you're fighting a trend down, looking for a counter trend move up. Looking at this, the NASDAQ 100, 3 went below the 6 13 days ago. Attempted rally here on the VPOC for a couple of days, as you can see right here, and then it rolled over again. Now I just put this folder together yesterday. I wanted, rather than just looking at the market indexes and comparing to ETFs, I wanted to see the sectors versus the major markets, and then I wanted to be able to see the crossover days, and then be able to go top down and use other screens. There isn't much to look at on the upside today, so I'm not going to do any more, but I hope you get the idea that you can use this folder, which is the 3B index, major indexes and sectors, compared to major indexes only, or the sectors. I put them together for analysis. That's the beauty of HGSI. We can do all of this. I'm going to end this video. That's probably a lot to digest, and I'll be building on these concepts in my weekly reports, and I'm also sending out short videos during the week, different techniques that can be used in HGSI. And if you don't have that list, if you're a member of the Insider Club, you're going to get the list all the time, but you can email me at ron@highgrowthstock, and I'll send you a link to those short videos if you want to learn more about the program. Thanks for listening. Have a good weekend. Be interesting to see if the short term can hold up and we can start building to the upside, but there are not a lot of positives out there right now, as you know.